Welcome, everybody. Good morning to everyone in chat. Welcome to the London session on TopstepTV. My name is Deeyana Angelo, aka Market Stalker D. I'm a Series 3 qualified trader. I've been trading for 18 years, coming up to about 19. And out of that, I've been trading futures for the last 14 years out of that. So it's been a while. Now, you may notice that I don't do NQ very frequently. I specialize in some of the less common products. So one of them is copper, another one is platinum, third one is DAX, which we don't really have. I also trade RBOB, which is gasoline futures, kind of like a twin to crude oil, only more liquid at this point. And yeah, so let's get into this little trade report. So I am getting close to the target here. So I'm not doing this to kind of shove results in people's faces. It's just to show what's possible when you're trading sustainably. This is the whole point of the London class here, that we don't have to trade with massive sizes. And honestly, if you're just starting a new combine or a new XFA, going like 3 NQ on your first day, it's probably not the best choice. You need to give yourself a few swings at the bat, right? Now, if you're a confident trader, if you're somebody who already passed 1 million combines before and you know what you're doing and you're already funded and you're trading, do whatever you like, okay? This whole advice thing, however you want to say it, is not for advanced traders who already are doing what they're supposed to be doing. At that point, you can be as aggressive as you want. You can do, 15 NQ if you like. Not that we would condone that, but still, it's up to you at that point. But for everybody else who is still grinding it out, where you're still trying to get there, you are sort of making money, but then you make a lot of mistakes that cause blow up of accounts. That means something needs to change, right? This is what I've been preaching to my VIP group as well. Some people listen, other people don't listen. They still know better, than people who have been doing this for nearly 20 years. And they're still making silly mistakes and still swinging for the fences, trying to pass things in 2 days. And, I'm going to say it openly. Back in the day when I joined Topstep, like some 10 years ago, we had a rule that you needed a minimum of 10 trading days before you would even be considered for any sort of funding, right? And I know that the industry has changed, and I know that, everybody has to go along with the times. There was competition, so we adapted the rules to be 2 days to pass. But is that a good thing in the long run? No, because if you've never been consistent for longer than those 2 days, that breeds inconsistency, and then people come to the XFA and expect that they're going to do the same thing. But unfortunately, that increases something called the risk of ruin. Because if you're going to try and, pass in 2 days on 150Ks, that means you have to generate 4.5 grand in 1 day. That's a lot of cash, okay? Now, you're starting with just 4.5 grand of drawdown. So what you're effectively doing is that you are basically aiming for 100% return in relation to the maximum drawdown that you get on your first day. So how many people do you know who have started, let's say, with a 50K true account in their own personal brokerage account, and on the first day they made 50K? How many people do you know? Not many, right? And if you try to do that, the most likely end result there would be a blown up 50K proper actual money account, right? So you would throw the 50K out the door. Now, obviously, with prop firms, they start you with some tight risk limits, and then you're supposed to build on the skills, on experience that you actually generate eventually, right? But no. What most people want to do is go from 0 to hero, from not being consistent, not making money, or being consistent for very small amounts of time. So let's say 2 days, 3 days, maybe 1 week. That's not what your goal should be. Your goal should be to remain consistent for 1 month, 2 months, 3 months. Once you're able to stay consistent and trade sustainably, that will transfer into your exit phase. Okay? Yeah. Bruno, I see your comment. Yeah, exactly. So most people start with like 10 or 20K and they blow it up because over leveraging. So why do we carry on doing that? It's because we are chasing the riches, and yet we still don't have the skills to back up what needs to be done, for you to have an identity shift in order to actually be able to reach your goals. So, it's literally something we hear over and over again. Oh, I put 10, 20K into an account, it was gone by week 1. Or, best case scenario, month 1, right? And yet people keep doing that in combines, expecting a different result, relying on resets as a crutch. Like, look, there are no resets in a funded account, okay? The reset is going back to the combine stage and doing it all over again, effectively making your job a lot more difficult, right? So I want to ask everyone, where is the rush? Have you got a train to catch? Like, what is this desire to pass immediately and, just get it out of your head and aim for something that's more impressive? All green days in a combine. Let's make that our goal instead of let's pass in 2 days. Dee is going to set a challenge. Let's pass with 90% of green days in a combine. So isn't that a better goal? Isn't that a goal that will serve you a lot better in a future funded account than, full porting it on day 1, digging a massive hole, and then trying to get yourself out of a hole and somehow YOLOing it, limping through to the funded account, and then expecting that something will change. Nothing will change. Your skills haven't changed. Your goal is wrong, effectively. You are supposed to aim for sustainability and not passing as quickly as possible. I have a tattoo on my forearm in my own mother tongue that says, haste makes waste. It is a mantra. Why? Because haste does make waste. You rush and you create rubbish, okay? So less haste, more speed. So instead of, trying to pass in 2 days, blowing up, resetting, so you throw more money at it, right? Then you do the same thing. So now you're like 2 months down the line, you still haven't been funded, or maybe you were funded a few times, but you blew up XFAs, even further amplifying the cost of entry completely unnecessarily because you're rushing. So isn't it better to just slow down, size down, change your goals, right? So let your goal be, I want to have as many green days in a combine as possible. Not over 2 days. Give it as long as it takes, okay? So I just wanted to start that with, understanding how you should be approaching accounts. Forget the 2-day rule. 2-day rule does not matter. Okay. How old was I when I started trading, and who showed me trading? Okay, so I was not young. I was 27 when I first even heard about trading. So this was like a long time ago, right? And this was literally like 18 years ago, right? So basically, I got interested in trading. Like, I always had a passing interest in trading, but I was just a musician. I was a session musician. I was classically trained, but obviously went into rock and pop when I was like 14. Still, finished all the school and everything. And then I decided to go into doing gigs very early. And I did that for a long, long time. But I always had this idea that someday I may want to do something in finance. Now, that seemed completely out of my skill set back then, because I wasn't particularly good at math. I was always good at languages, music, creative writing, all of that was a lot more up my alley. But somehow I also knew that I had this analytical brain, I had photographic memory, and I don't know, there was something inside me that was like, yeah, this is a very interesting thing, this trading thing, investing thing. It would be great if that was my career. And in fact, in one of the interviews that I did as a musician, they asked me, what would you do if you weren't a musician? And I actually said, well, actually, I think I would be, an investor or a day trader or something. And they're like, oh, really? Like, it was just such a faraway thing from what musicians normally do. Finally, in 2007, I decided to kind of try getting into investing. And just like everybody else, I had no idea what I was doing. So I put some money into an account. It was a brokerage account. It was like $500 or something. And I just randomly was watching CNBC or something, and they were talking about stocks. So I bought some Intel, and literally I basically caught, a few days when it was really going up. I didn't know why. There was no level. Like, concept of a stop loss was like, what? There's a stop loss? What? You mean you don't just put all of it on? I didn't know anything. I was so green. I was, completely coming to it from a layman's point of view. And I got lucky. So it went up. It went my way. And in like the space of a few days, I was up like over $4,000 with like the original cash. So it's like $4,500. And I was like watching it and I'm like, oh, this is easy, right? Like, this is going to be nothing. But then the very next week, things turned around, and I not only lost the $4,000, I also lost the initial deposit. And then I was like, that was not as easy. And then, I had some friends, because I used to do a lot of gigs in and around Bank area and city and stuff. There was a few clubs that we had residencies at. So I had a few trader friends, and one of them, we started talking, and I said, yeah, I'm really interested, and I just don't know where to start. And he said, well, let me show you how we do things. So he showed me swing trading, like basically looking at the location of the top and bottom of swings, how they were created. It was basically a version of supply and demand trading, right? So, but it was for swings. And a lot of people back then over on this side of the pond were trading Forex, because it was like, it was moving and it was a good market back then. But yeah, basically we kind of sat down, talked it through, and that really put me on the path of wanting to know everything. I got interested in risk models immediately, so rather than me kind of just clicking buttons, I was like, how can we make this more systematic? And don't get me wrong, in the first sort of couple of months, I looked at moving averages, I looked at moving average crossovers, RSI, like all of the normal things that you hear about, MACD divergence. But to me, on range-bound days, you would get absolutely slaughtered, and I knew that wasn't for me. I needed something deeper. I needed something that would give me the situational awareness, and I was like, there's got to be a way somehow to read what the day is going to be like, or, whether we have some momentum behind a move and blah. And then, supply and demand sort of enabled me that, because, they were looking at like big candles as a move away. Now, immediately nowadays, I know that those kind of candles carry a lot of volume in them. So immediately there's like a little bit of a volume analysis in there, even though in Forex you don't have true volume. It wasn't a futures market. It was like a decentralized market where, some of the transactions are done in, resorts, hotels, airports and stuff. Forex market is very, very random in that way. But this basic analysis of looking for the big moves away from an area that created some sort of a swing extreme, that was a game changer for me. And it wasn't just that. My trader friend also told me to never use more than a tiniest portion of the available capital, and to always have a positive risk reward, to always put a stop loss on there. So he was the one that kind of showed me the ropes, so to speak. And for the first sort of 2-3 years, he kind of stayed somebody that I would kind of call up and cry on his shoulder if I was doing something stupid. And then he would basically tell me what I should be doing versus what I shouldn't be doing. But I didn't have a long time of bumbling around strategies where I wasn't happy with the returns and stuff. So I had success pretty much early on, but still it wasn't until probably about 2 years into it where I learned what a margin call is, and it was all my fault. All my fault. So basically I built up some money. I think there was about 70K in there. It was all profits. So I put in, started with very low amounts, like 2K, kind of like the 50K combine, and then kind of built it up from there over a 2-year period. It was, it was pretty slow. It was 70 grand over 2 years. It wasn't, wasn't anything terrible. But then I got biased on a trade. I was sure that, as soon as you say the words, I'm sure it's going to turn around. And, I didn't have the situational awareness that I have right now. So basically, long story short, I kept moving the stop, and eventually I blew up the account. So I was like, oh, that was dumb. And that put me on the path to find out why that happened to me, rather than, crying over it. I was very proactive about it and wanted to make sure that it never happens again. And that's why I know a lot about psychology, fight or flight response, how to control it, and yeah, so we're actually going to have, I'm trying to get Jerome here next week to talk exactly about that, about the mental side of things, which I think is so important. All right, let's have a look at more questions. So yeah, I suppose when I started trading seriously, I was already 28, so a year into my initial excursion into some Intel stocks, and I wasn't young, it was, I was young, but obviously some people get into it very early. I got into it relatively late and then had early success. But generally, if we're talking intraday trading, so I did 5 years of trading swing, and then another 2 years of learning how to trade intraday. So it wasn't a quick thing. It wasn't an overnight thing. It took a long time to get the consistency intraday, because intraday is so sensitive to any inconsistencies you may have. If you look at your trading as every single piece of the puzzle being a different parameter, what would happen if you change a single parameter? So you wouldn't think it would make that much of a difference, right? Trading, let's say 2 micros to 3 micros. But you're actually changing the sizing completely, which means that if you don't then change the personal daily loss limit, if you don't change the number of trades, if you also change the number of trades that you do, if you then also change the stop size, all of that means you're changing parameters. Or if you change the size, but you don't necessarily change the stop size and you haven't built up the account, what happens then? You change the parameter willy-nilly and you will affect the entire risk model. Okay? So I always have an idea of how much I want to risk, what is my personal daily loss limit or, budget for the day. Anytime you change something, you size down, all of the other stuff needs to be sized down as well. Personal daily loss limit needs to come down. You have to understand that intraday trading will be very, very sensitive to any inconsistency you have. Some people go from trading 3 trades in a day to trading 10, and then back to 1 trade a day. It's like, that's a huge change for the number of trades, and unless you can really justify why you're doing that, it's going to be fear. So for me, if I'm only going to trade 1 trade, it means that I've identified a swing level that can handle, having 150, 200 ticks inside it, and I'm only going to run it on a small position size. But let's say that I've identified maybe a range day. Typically I would trade more on that day. So, there's a reason why I would change the number of trades per day. It's not just going to be clicking buttons for the sake of it. Trap Card says, what are the strategies you use and how did you encounter them? Self-learn, etc. Just asking because I'm dipping my funded account with a little bit of this and that. Can that be consistent? So, like I said, my first strategy was supply and demand on larger time frames. Anything that came after that was me taking a concept and then modifying it to fit my purpose. This is why I have the market talkers method, right? This is why it exists, because it's a very unique blend of different things that I've come across over the years. Some stuff worked for me and I kept that. Other things didn't work for me, so I discarded that. And, after so many years, you do get a lot of kind of stats about market behavior through different market states. I've been through, several Black Swan events. I've been through another Trump presidency. I've been through super quiet times of, quantitative easing back when I started in prop. I've been through Forex market drying up. I've now also been through crude oil market drying up last year. So all of this kind of breeds experience through different market states, and there is no replacement for that, whatever strategy you're using. But for me personally, I use a very specific blend of my concepts effectively, but some concepts exist, they're out there. However, I modified them, like I said, taking what I wanted out of them and discarding the rest. So my style of trading is some supply and demand, some market profile, my average range levels, which are very different, options levels thrown in. I use Mentor Cube for that. And then obviously some very specific positioning and expectation of risk reward and the number of trades per day. So if you are kind of willy-nilly just putting things together, that's great, but just make sure you journal throughout it. Don't just be, expecting that somehow magically it's all going to get put together, right? It's a science. So if you are approaching it as, let's just see whether this works or not, without actually tracking stats, you're in a numbers game, okay? This is not some, mysterious, get a crystal ball, let me read your palm kind of thing. It's literally data science. And yes, it can be randomly distributed, so you can run into a period where your setup is just not working, or it's working, but you need humongous stop losses, which is the case in equities right now. And that will put a wrench in the works. You're like, well, now what? That means that your stop losses are not scaled to the volatility of the product, so therefore your expectancy, the positive expectancy that you may have had on a smaller stop in a different market state when we didn't have 1 million ticks per day, it means that you haven't scaled your stops to something that will be consistent enough across different market states, whether the market volatility expands or whether it contracts. Because when that happens, like we have in equities, you can't be using the same stop losses, okay? Some people are like, oh, do or die, I'm going to use 20 points in NQ. Cool story, bro. But, a year ago we had NQ moving barely like, I say barely, it's a monstrous product, but it's like they were moving like maybe 800 to 1,000 ticks per day. And let me see where we are at now. We're now nearly at 2,000 ticks per day on average on NQ. So is that the same market? So is a 20-point stop going to be the same in a market that's moving, whatever that is? It's like, let me do some calculations very quickly. So let's say we had 800 ticks of movement. That's 200 points, right? Now let's say we have 1,800, and that's 450. So you tell me, is a 20-point stop in a market that moves 200 points versus a market that moves 450 points, is that the same thing? Is that the same thing for you? Because to me, that's not the same thing. So if you effectively have, a stop loss of 20, and we've just had an expansion of roughly 2.25, well, not roughly, but 2.25 times, that means that your stop loss also needs to be expanded by 2.25, yeah? And that means suddenly your 20-point stop needs to become a 45-point stop. Now that would be transferable, okay? Why? Bigger volatility, bigger ranges, find a way to scale your stops to the volatility of the product. I have one way of doing it. Coach Paul has another way of doing it. But we both use something systematic that is based on the actual range of the product that you're trading, right? So, when we're talking about system design, it is a science, and most people are, quite frankly, not adept at creating a system. Because you don't know the first thing. Risk rewards, and it ends there. There's no percentage per trade, risk per trade. There's no number of trades that you can fit into a combine, which is another, it's yet another parameter that you have to think about when you're in a prop account. You have, time of day when you execute trades. I have people who have never traded Asia, and then suddenly they heard some rando on the internet say they trade Asia, and suddenly they're like, oh yeah, I'm going to trade Asia. It's like, you've never traded Asia. Like, you spent 3 years honing your skills on the New York session, and now you're going to trade Asia. Don't do things like that. Test things. Go back, do a visual back test. You don't have to use sophisticated tools for that. You can just do, okay, let's see how it moved. How many ticks do we have during Asia? Don't just take somebody's word willy-nilly and then put the accounts that matter on the line because you heard somebody say something that's working for them. It doesn't mean that it's going to work for you, okay? But yeah, the first step is to find something that you find resonates with you, that you connect with, and then to start seeing whether in real time you can make that work. That's always the step one to any system design. But in the end, it's all down to you journaling things, coming up with your own playbooks, because you have to have your playbooks. If you don't have a playbook, I just will never even consider those kind of traders actual traders. They're just clicking buttons and they're like, oh, it's your setup. What's your setup? Well, I don't know. Moving average. It's great. I mean, that can work if you're extremely disciplined. And I mean, extremely disciplined. Not just oh yeah, one day you're doing 30 trades, another day you're doing one. But if you're somebody who is naturally extremely disciplined, by the way, those are unicorn people, right? Unicorn people. Eventually all of us, when it comes down to it, we're all a mishmash of things that we've kind of come across along the way, kept what worked for us statistically and resonated with us, and threw away all the other stuff that didn't work for us. Yeah. So you're not going to gain consistency until you start tracking things that has worked for you, until you start being doing more due diligence on what you've already traded with. So let's say you've done some trading. If you just throw away all the stats with every single new combine that you're doing because, I messed it up, those mess ups usually contain more good information that you can use to get better than the combines where you just somehow YOLO'd your way to an XFA. Because, 2 days, I've done so well. Yeah, the market sort of went your way for a couple of days. But what happened on all the other days when you blew up and you had to reset and reset and reset and reset? Those are the combines that you need to be tracking and seeing what was the time of day that I maybe partially managed to be profitable, because there will be a section of the day when you were up on the day. Take that information and use it. So mistakes that we do are a lot more valuable for growth than any combine that you've done in 2 days' time and you've done everything perfectly. Whenever I'm teaching people, I don't care about perfect combines. I care about the ones where you're messing things up, and that's the ones where we fish for an edge, because it's difficult, right? So yeah. Rant over. Let's get back to the markets. Akib says, do you use risk settings? If so, what do you recommend for a 100K account? I talked about this on Thursday when I was on with JD for Lunchbox Trading. I usually like to start my students with no more than, look, what I do, and what you do is probably going to be a little bit different, because I know my setups. I can do one, like I can run you through my copper trade that I started on the stream, and I actually ended up extending the target because it was looking pretty decent. So let's just go into charts and data, show chart executions. There we go. So yesterday I only did one single trade. There it is. I started it during London. Let's make this bigger. So trade recap, right? So initially, I still kept these levels from yesterday so that I can do this recap whilst we're waiting for things. Because right now I'm only needing, a very small amount to pass this, and I want to wait for a perfect opportunity. So yeah, yesterday we had these put levels that were not respected out of hours. Okay, so that's an important point. But I also had these value areas that were very interesting to me. And at the time, all I could see happening... Let me just hide this. So all I could see happening was this, right? So we entered the trade, and I initially set a target. I was like, I'm gonna just do the value low. So I was like, 39 ticks. But then it got to value low, and it accepted it. So it accepted the value area from yesterday. Now, to me, that's a cause to hold the trade longer. So I was like, let's see where they want to take it for COMEX. And there was obviously a reversal, but then another thing set up perfectly. VWAP from Globex started lining up exactly as these puts from 0DTE options levels. So I was like, this, if it bounces, this is going to be a bigger trade. So I'm going to see what happens. Now, this is the situational awareness of recognizing when a trade has more legs than you initially wanted to see. And then, unfortunately, the electrician came over, and then I was without electricity. But if I was in on this, and if I was watching it, so I was in on it, but if I was watching it, I would have actually added more at the right time of day in order to increase the position size. So I've already been in this for a long time, and only when it came to another important level throughout the course of the day, I would have considered adding more to the trade. But I didn't, because I didn't have electricity. So we were like changing this box that was really dodgy, and it's a Victorian house, and it really needed to be changed. So yeah, we're just kind of putting things together to try and make the move and to make the house safe for whoever is coming after us. So yeah, anyways, if I would have seen this put support level with VWAP as a support, as an additional confluence, that would have been my scale-in point, right? But it wasn't. So it's like, whatever. I wasn't able to do it. I didn't have my charts in front of me, whatever. And I just kept it as the original target at the other side of the value area high. Now it went higher, right? Carried on going. But to me, that was good enough. So whenever I recognize that there is a chance for a trade to turn into a bigger swing, that's one thing. But, for most people, you won't be maybe that adept at reading the market immediately, and it takes a long time to figure out what's your swing setup, what is your intraday setup, how does it relate to one another. So I would say, even if I can be maybe a little bit more aggressive to begin with in a combine, I would not suggest that for anybody who's newer, especially if you've been trading less than 5 years, right? Maybe 3 in some cases, especially if you're profitable. But for most people, 5 years is a minimum amount where you can expect some experience to start cropping up, and you start getting more confidence, and you're like, right, I've been staring at this stuff, journaling for 5 years. I know to recognize my star setups, right? But if you don't have that, I would probably start a 100K combine with a 300 daily loss limit. And do not touch. You reach 300, you are risking enough to make a certain amount, but so you're not totally locking yourself down. I see some people who are like, I'm going to limit myself to $150. And I'm like, well, that's great, but it's a little tight, you know. You need to give yourself a little bit more leeway. However, dividing any kind of daily loss limit by 10, you get, you know, a little bit of leeway. It's not going to be, you know, let's do a 10 lot, but it's going to be enough to make you survive for full 10 days before you blow up. Full 10 days. And that's difficult to do. You know, I'm always a little bit shocked to see when people go on these like super extended runs of like losing 20 days in a row. It's like, what are you doing? I think my worst day was like six in a row, right? And that's usually either because I'm using the risk settings that are too tight and then I just stop before I kind of give up on the day and I'm like, I can't be bothered. Usually if I'm like feeling really sick and I can't be, like I just don't have enough brain power, then it's like, whatever. But generally, if you're looking at the market and you're trying to figure out, you're trying to play detective, you want to find a good setup, you should be able to find a couple of setups a day that will be able to generate some sort of a result, right? Now, at 300 daily loss limit on a 100K combine, it's just enough to not put you in a massive hole on day one if things don't go well, but it's also enough of a leash to make you enough, let's say 200, 300, 400, 500 if you're more adept, maybe even 600, 700 on the day, right? It's a good enough. So let's say aiming for 2R multiples from whatever the risk is, right? So if your risk is 300, but you're aiming for 2R multiples, so you're risking 300, but you will be making 600. So if the first trade works out, you're done for the day, right? Some people don't like that. They want to click buttons all day long. So they will be going, well, I have a 300 daily loss limit, but I want to fit in my 50 trades into that. I'm not in favor of that. I'm going to be honest. You know, I see a lot of variability when people do that. I would prefer that everybody goes for quality over quantity. You know, find that one good swing trade at an exhaustion point or somewhere that you think the exhaustion might happen and then it reverses. That is your trade on the day. You know, you only need one. So think about that. Instead of clicking buttons all day, you only need one good trade. So, and in fact, if you look at my results, on the days when I was patiently waiting for one trade, here was a crude oil trade last week, just one, Wednesday, one single trade, held it for hours on end, and it got there. And then yesterday, same thing, copper trade, one trade, swing trade, held it for hours, done. And arguably, yes, I've had maybe one bigger day than that, a couple of bigger days than those, but you know, whenever I did a more range-bound style trading, it's a more trades and less money, right? So much more work and less cash. So it's like, you know. Yeah, Wes has a good point. Why start with a 100K combine and not a 50K? First, prove you can make it work. Yeah, so there is a case to make for starting with combines that have a very aggressive target. So whenever you have something that has more than double the amount of the initial risk, that is an aggressive target. So I would agree with Wes there. Why start with 100K? It's going to be dollars in their eyes. Like there's no other reason. It's just, let's go for 100K because that's only 6K to make. I would start with a 50K, absolutely, because 50Ks are fairly generous on the drawdown at $2,000 for a very, very achievable target of 3 grand. So to me, that would be a better choice because 3 grand is easier to make than 6 grand. That's like nearly double the amount. And that's where you start chasing. It's kind of like I have some students who who tried 150K combine and they're chasing. They're like, oh my God, I've got 9 grand to make. I will never get there, blah, 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 blah. And then they get themselves into, a complete disarray of emotions and, and panic that they're not able to do it purely because their skills are not there yet, right? So, right, so Bruno says 4% instead of 3% for the 50K. It's a best deal. 4%. What is that? Best deal. All right. Yeah. Yeah, I do get that. The drawdown is bigger, but we also have the aggressive target that is double the amount, right? Whereas on a 50K, I have a calculation called the DTR, drawdown to target ratio. So if you look at the 50K, the DTR is 1.5. Now, usually anything up to 2 is fairly easy, but generally 1.8 would be kind of my cutoff point for anyone who's more novice or anyone who's been trading for years but never got to consistency. So this is what I look for. I don't really like it to see novice traders doing combines that have DTR 2 or over. But so basically, the 100K has a DTR of 2. So it doesn't matter what drawdown you get, the DTR is 2. That means an aggressive target. If you look at the 150K, that should be the same. But then some companies out there will have, 20 grands for a target and only giving you, let's say 7.5. That's so difficult. By the time that you get to like a minimum balance that they would kind of require, because they all have different rules, but this is going to take you forever because you have to generate a lot of cash before you're eligible for a payout. But on Topstep, that is not a problem because all accounts, once you pass, have the same payout schedule. It's 200, 5 days over 200. Some of the other companies are nowhere near as kind, and they will want you to reach that minimum balance before they, shell out a payout. But that DTR ratio is, to me, very important. And the only one that I would really, say to a beginner trader, based on account size. Yeah. So Bruno, I do understand that there's like more drawdown based on the account size. However, that is not the value that we start with. We're not starting with nominal values. We're starting with maximum drawdowns versus a particular target, right? So this is where maybe people go wrong because they're like, oh, wow, you get so much more for your money. But you put it the other way and suddenly you're like, more aggressive target. That's going to make things difficult for me. Because, you have to look at it from a trading point of view. How easy is it to reach the target? How long that is going to take you? Now, for me, if I'm trading, like I'm not rushing, because again, we can't have, I still have a live account. I can't have XFAs, right? So I was like, I'm just going to slowly slog it through this combine. And there's no rush. There's nothing. And that's what it looks like, right? It looks like calm trading. My stats are nothing super special. It's like 52%, which is actually outperforming what I normally do. Normally over very long sample sizes, because let's face it, 8 days is not, or whatever this is, like 9, 10 days is not the biggest sample size. It's good. It's okay. But, I usually base my my sort of positive expectancy over, a 3 to 6 month period, not just, oh, let's just YOLO it in a couple of days and use, or a couple of weeks, and use that as my benchmark. So I want to see how it behaves over longer periods of time. And usually this goes down. However, this goes up. So, it's kind of on a seesaw. So if your trade win goes down, you have to have like a profit factor that is statistically viable for that accuracy. If your trade win goes up, well, then your profit factor can come down, because it's all like this fine balance, a balance beam, right? Like literally, it's a seesaw. So it has to be in sync. If those two are not in sync, which is what I see in my VIP all the time, the dude's like doing 40% accuracy and a profit factor is a negative 0.8 R, and I'm like, that's a negative expectancy. Okay, however you spin it, it's a negative expectancy. So you're basically trading with zero chance of ever making money, because the math, like I always say, math is not mathing, right? So if the math is on your side, things become a lot simpler. So, high trade win percentage, you can afford less risk reward. I would still like to see it at 1R, so 1.0. Every time you get into negative expectancy, into negative profit factor, that's always tricky, because that means you have to maintain higher accuracy. High accuracy over a very long period of time, we're talking years, is extremely difficult to maintain with some consistency. Extremely difficult. Everybody has malfunctioning days and weeks and periods when things are not going well for them. But that's exactly why I based my systems and how I trade on very long sample sizes. And look, during COVID, I was like smashing it. I had 70% accuracy, and my risk reward was like 2.3, but that was because we had incredible liquidity, and all of my setups were working out, but for more ticks and for slightly more size. And then they suspended crude oil, so that was tricky. But then again, I went and traded some other things, and that was also very, very fruitful, because the amount of movement we were having. But generally, if you're not aware of your sort of system design, and if you're constantly expecting to like full port it and just go crazy on the position size and just go, ooh, I just caught like, $4,000, but you were in with 10 NQs and you only grabbed a few ticks, that's not sustainable. It is not sustainable. And I would say, you have no idea what you're doing. Like, I'm sorry, but it's just like, explain your trade to me. Explain your trade to me. And they'll be like, oh, it was a bounce from VWAP. It's like, that's not a trade setup. Was it a directional day? Well, I don't know, I guess. Oh, you guess. Was it a bounce from VWAP with some volume behind it? Or did you just kind of grab 4 ticks on a product that's moving like 450 ticks, and you're calling that a successful trade? Can you repeat that? Like, can you actually repeat that? And they're like, yeah, of course, there's a bounce from VWAP. I can repeat that. And then the next day they try the same thing, but then NQ does NQ things. So it overshoots VWAP by about 1 million ticks. So now they're in the hole for about $4,000 or more with slippage. And they're like, oh, that didn't work. And I'm like, yeah, now let's do that again tomorrow. And they keep doing it and keep doing it. Some days are good, other days are not. And then we look at the trade accuracy with all of the mistakes, all of the mess ups and, F-ups and whatever you might have done, and all of your YOLOer moments and, fear and everything. That's when we derive the system design accuracy, right? So it's like, what is the actual accuracy of your system with all of the mess ups? Because you're going to mess up again. If you think you're not, you're in the wrong industry, okay? We all mess up. There's no such thing as perfection in anything, but in trading in particular, okay? So if at that point your trade win percentage from that one single playbook setup bounced from VWAP, over, a sample size of, let's say, 2 weeks with all of the mess ups, if you affect, yes, Bruno, that's a very good one. Yeah. That's very, very NQ. Yeah. So let me try. Oh, Bruno, you make me laugh. So, this is what our lovely moderator Bruno said. Yeah, so this is NQ doing a VWAP overshoot, and then hilariously it just goes back to reclaim it. But yeah, if after those 2 weeks and you using one single playbook, one single setup, if it doesn't have really high win rate to account for the lower risk reward that you're seeing, that's a losing strategy. It has a negative expectancy. Maybe the bounce from VWAP in general doesn't have a negative expectancy. It's a good, setup, but you doing something with it is causing your style of trading to not be able to catch it on enough times in order to make it viable. And then people just kind of have blinkers, but it's my strategy. It's like, great, your strategy is negative risk reward with low accuracy, and you're expecting that somehow you're going to make money that way. It's like, come on. So you have to have these numbers, the combination of the profit factor versus your trade win percentage overall. It needs to reflect a positive expectancy. Positive expectancy, it's either profit factor at 1.5 and over and a trade win percentage of 50% roughly, or profit factor above 2.2, so going for more swing type trades, and trade win percentage in the 40s and 30s, that will be a winning percentage as well, winning system too, or more scalper style, so over 65% accuracy with a moderate profit factor of 1-to-1. Now, if you have a negative profit factor, you absolutely have to maintain accuracy over 70%, because otherwise it's just not going to work. If your numbers are not reflecting that, your system design is all screwed up. Like, I'm sorry. There's no way around it. I can try and tap you on the back and go, oh, so sorry. But, like in the end, we're here to turn your skills around. We're not here to complain, be victims, say, oh, this always happens to me. It's like, it's happening to you because your system has a negative expectancy. Like, it's, So something needs to change. You're either not scaling your stops to the volatility of the product, or you're over trading, or you're oversizing, or you're not waiting for the price action to show you the way. You're not using situational awareness. You're just kind of clicking the button and hoping for the best. And even when you are using all of that, you can still find yourself in a situation when there's a random distribution of probabilities. So even if let's say my system has ballpark, 60% accuracy, and there will be a lot of variables in there, right? You're not always going to use the same levels, right? I do, which is why I'm a more systematic trader. But many people don't always use the same levels. Sometimes they will use a moving average. Other time they might use VWAP. So some other time they might use a random level that they heard from one of us, right? Oh, that's a good idea. Click. So all of that causes inaccuracy. But if you're effectively testing how your system is done, you have to have the awareness that the random distribution of probabilities may still happen. So even though you might have a 60% accuracy, you might run into 2 to 3 weeks, maybe even a couple of months or 3 months, even a full year, where your probabilities are going to be skewed to the other 40%. So it's like constantly you're like in the 40% days. It's like, this didn't work. Or this didn't work either. This didn't work. This didn't work. So it's not going to be like if your system has a 6 out of 10 accuracy, that you're going to be like first day, second day, third day, fourth day, fifth day, sixth day, bust. It's not going to be like that, right? Sometimes it can be 1, 2, 3, 4 loss, 5, 6, 7 loss, and then you can have 1, 2, 3 win, and then loss, but then win, like random distribution of probabilities, right? And that's what screws people up on a small sample size. Small sample size means you don't have enough sample. Sample not there yet. To call whether your system has a true positive expectancy over time. And time is the only judge of your system. Only judge. Nothing else. So I'm not going to be impressed if people are like, oh, I passed the combine in 2 days. In fact, you're going to get one of those memes, which I should probably make. There you go. So that's how I feel about people passing a combine in 2 days, right? No words necessary. Hopefully that illustrates my point. Anyways, let's see what levels we have. Let's see if I can find something somewhere so I can get this combine over the hump. DAX is trying to get out of the initial balance. We don't have DAX, so skip. Copper, where are we? We're above. Sitting around settlement. It's not looking that great. What's platinum doing? Platinum is bouncing from VWAP. That could be a possibility. Let's have a look at the options levels. GEX1 is at 1030. Let me get this chart a little bit lower so that I can see what the hell I'm doing. All right, plenty of space on the ADR and ASR because platinum 1044.2 is the ADR high. So loads and loads of space. Average session range high for London is a little bit higher up there as well, but yeah, this will be good enough. Obviously, there's Globex VWAP that we're just floating above. That spells strength. It's still inside the initial balance for the London session. So, hold on, is that right? Let me just check my timings. Yeah, so that is right. Okay, so the initial balance, I'm going to put it as a rectangle. Is this big pop, and then like this. Still inside the initial balance. One of my rules states that if there's no extension of the initial balance, I cannot go in. So I'm going to wait. But that's a definite possibility for longs. We have GEX1 and GEX3. So GEX1 is 1030. GEX3 is 1035. And basically, if we can go above that entire area, then we might be able to get a long trade towards this average daily high. And also, we have some core resistance and gamma wall at 1050 that is still there. That hasn't moved for days, actually. And that's from 0DTs from end of day yesterday. So longs towards those areas will look good. I just need a little bit more commitment. And obviously a smash outside of the initial balance. Otherwise, this might rotate to the other side, then fail the auction, and then I'm going to be crying. So I'm not going to be crying. I'm just, yeah. Chris says, I thought switching to 150 combine, the drawdown would save me from blow up, but I still managed to. Yeah, that's a common misconception. It means that you are not, again, you're doing something that is not conducive to passing combines in a sustainable way. The size of the combine is not going to save you there. And in fact, the only person that I've seen recently do I'm signing up for 150K was Paul H, actually, because he proved consistency on a 50K, and he spent like months and months doing 50Ks and staying in an XFA, trading sustainably. And then he said, I'm going to sign up for 150K now because I just want a bit more drawdown. So all of his process was still in place. And it's not to say that you still won't have bad days, but that is the appropriate time to go bigger on the combine. Not because you're like, oh, I think that extra drawdown is going to save me from blowing up. If you're blowing up small combines, that's a terrible thing, right? It means that you're oversized, or you're over trading, or your system is just not functioning correctly, or your stop losses are not right, or your targets are not right. Like, there is something that you're doing that is not allowing you to pass smaller combines. And usually it's the size. Like, let's be honest. People love sizing up. Trap Card says, Dee, will you ever add your levels to the weekly market levels? I want to have levels for copper, platinum, and maybe I could. Look, that would be great, but that would mean that I would have to get permission for intellectual property from my business partner. He's not going to be very happy with that because it's a service that we provide. Okay, so I have an entire business on the other side where I give levels to my students via the indicators that we created. It's a whole business. I'm not about to give that away as a, intellectual property to another company for no compensation. So no, that's not going to happen. If you want those levels, unfortunately, you're going to have to go to Blatek and get those levels from our tools, from the indicators. And I can appreciate that some people are like, no, but you only do it for MetaTrader 5. However, it is an AMP MetaTrader 5, so it's the futures markets. We are creating the indicators for the NinjaTrader, but it's not going to be available for a while. But I'm actually toying with the idea of creating a little Discord bot where our levels will be posted, kind of like, similar to what MentorQ does. And then you can plop the levels in whichever platform you want. Granted, I would prefer that, we had our own indicators where you can actually put a string into. But yeah, it would still be maybe better and would provide you with more flexibility. So I don't know whether that's something that people would want to see, but I ain't giving my levels for free to anyone. And I've got to say, including Topstep, Because, it's like it will be extra time on my part. Why would I need to spend 2 hours editing my levels for a whole bunch of products when I've got an indicator that does that automatically, okay? So for no compensation whatsoever. I'm a businesswoman, okay? I'm not, I'm not doing everything out of charity. I'm more than happy to share my experience, but there are certain things that I worked very hard on and worked on developing my businesses very hard. It's not a charity, okay? So, obviously my levels are my levels. You want to get them, you have to pay some money for them. I'm sorry, because they are very valuable, right? There are exhaustion points. You've seen it on Thursday. Even yesterday, like if I show you how the ES ADR high worked out last 5 minutes of the market, but it was the same level that I had on Thursday, that 55.12 that I called. Well, we had 57.02 yesterday. And if I show you that, so I'm going to go back in time. So same thing, right? Let me just clean it up a bit so that you can see it. So this is as it was at the time. The dotted lines are my exhaustion points. So they're not obvious because they're not based on actual highs, lows, this, that. They're based on an average over a certain amount that is plotted dynamically intraday as you're making highs and lows. So basically, same thing that I called on Thursday as a reversal point that got us a massive reversal off the end. And that's now on my YouTube channel because I decided to start doing a little bit more excerpts from the TopstepTV side of things. But basically, this is it. So 57.02 is where the ADR high was. So we exhaust that. And we overshot it by about 6 points. But anything within sort of like 15 points is what I figure a reclaim is. And then they took a while. They took an hour to actually turn around, and then sort of 5 minutes, in the last 30 minutes. But really, I was watching this. It was literally like 5 minutes into it. 5 minutes to the end. And they're like, yes, let's smash it. However, ADR high, it worked, right? So it's like, they work. And then if we go back to Thursday, here it is. I was plotting what... No, I actually did do this in a combine, I think, as well. Because obviously I called it, and I was like, actually, this looks pretty good. So I entered it. But anyways, so this was the level. Let me delete that. This was the level. ADR low, 55.12, is what we were talking about on Thursday. How did I know that? I didn't. It's data. I just know what happens. And that was the area that kicked off the swing. Now, on that Thursday, I did say these sort of exhaustion points can bring more serious swing reversals. They can handle swings that go for quite a long time. Now, granted, ADR high on an equity index will not have the same expectancy as ADR low, because obviously it's an equity index with a strong upward bias. So obviously I will lean more into the ADR lows than I will into ADR highs. I will be more careful, and I will want to demand like the final 30 minutes before I plow into a short based off an ADR high on most days. Dan Trader says, did you hear that Topstep is opening the API for TSX? Maybe you can develop your indicators for TSX. Yeah, the problem with some of our more complicated indicators like TPOs and stuff and market profile is that they are coded in a proper object-oriented programming area, language, whatever you want to call it, OOP, right? Unfortunately, PineScript is what this is based on, even though you can kind of wrap it into... I think you can wrap it. I mean, there's Python libraries that come with it. But the last time I looked at it, it looked more like a scripting language than anything. And you just can't do certain things. Like, for example, I just showed you a backtest. You wouldn't be able to do that on PineScript. So, going back in time and just having it plot everything as it should plot, it's like it would be very, very tough, if not impossible. So maybe some of the simpler indicators would be possible. But yeah, then again, when I asked Topstep a while back whether they're going to have some kind of a third-party vendor system so that we can actually make a business out of it, charge for it, they said no. So I think you'll be able to have an API that connects to something. But whether they would expect that to just be all open source, all out there for everybody, and, to not have any protection, I don't know. I really don't. I would need to be very careful. We're obviously a company that has very elegant solutions that were disruptive enough for other companies to try and copy that. So, you have a number of people on TradingView who are trying to copy our ADR indicator, and they're doing it wrong. Like, I still haven't found one that actually plots our levels properly, which is a good thing, right? It means they haven't figured it out how we are doing it. But yeah, it does worry me, if all of the indicators just become whatever. It's one of my businesses. I'm not willing to just kind of let it go and just go, well, I've done 10 years of work on my indicators with multiple updates and getting everything that people wanted, just to kind of give it away and just go, well, there you go. It's a big chunk of my income is now non-existent. So, we have to be a little bit more realistic. I know that everyone wants to be altruistic, and everybody thinks that everyone who's in trading is Warren Buffett. And yes, we can be well off, but I live in London with 40% taxes, and honestly, it's not easy to hold on to money, right? It's Not that you can take it to your grave, right? It's so funny. We were talking to somebody, and we have a friend who's pretty young, very very capable, and he's doing well in trading, but then he just doesn't spend anything. He's just like hoarding cash, and he's not spent it on barely anything. Literally, he's like, I'll buy a secondhand TV, I'll buy this, I'll buy that, and my husband went, yeah, you can't take it with you, right? It's like, when you're 6 feet under, you can't take that money with you. Jason Blake says, D, is AMP the only futures broker for MetaTrader? As far as I know, yes. There might be others now, but basically it's Optimus Futures also have the same thing. So they offer MT5, but it's via AMP. So it's still the same thing underneath. How much is the minimum deposit required? I'm not sure. It's been a while since I've opened up a new account, but I think that some of my traders, maybe $200 or something. So it's not outrageous. Obviously, don't trade with that because, if you just want access to the indicators, then you can just, you can just open up a live account for the minimum amount of cash, but don't try and trade it because it's not enough money. It's like 200 doesn't get you anywhere in the futures. Even if you're like trading micros, unless you're like really careful, maybe you just do swings and stuff. The only reason to keep a minimum amount would be access to data, for example. But yeah, as far as I know, AMP is the only futures provider for MT5. And like I said, we're trying to move away from that, the MT5 story and everything, but it's going to take time. It's not going to be overnight. There's only 4 of us, and it just takes time. These things just take time. So wait for us, please. Alejandro, Deeyana, are you familiar with the ICT smart money concept from Michael Huddleston? I am familiar with it. I am not a user of it. Let's put it that way. I do respect that Huddleston has given away the way to kind of read price action. So if it's helpful to you, kudos. But I do think that it's repackaged auction process stuff from back in the day. So, and I think that the auction process and profile, they actually simplify the concepts to the point where it's very easy to figure out like 5 or 6 playbooks. It doesn't have to be a huge rabbit hole of FVGs and silver bullets and macro this and manipulation that and turtle soup this. So, it's a good thing that it's out there. Let's just put it that way. But, just be careful not to lose yourself down every single setup. Take the setups that that resonate with you. Test them like he says. I actually really respect that he tells people, go and back test it. See how it works in the back tests. However, what I've realized with most people back testing manually, they sort of have blinkers on. They look at the setup that would have not worked on the stop loss that they're using, but the level worked. So they're like, oh, that was a check, that worked. And then they come to do things in, the real markets. They get whipped out and they're like, oh, what happened? So measure the size of the stop that you would have needed in the back test, quotation marks. And, be as accurate and as objective as possible. Some people with ICT concepts, I've also seen them kind of overfitting things in the back tests. And, again, that is a big no. Overfitting for the period that you're looking at. So again, larger sample size and everything. So everything that he's teaching, I do resonate with, the price action side of things. But I've said it before, the only thing I have a problem with is the conspiracy theory stories and, a bit much soap opera sort of thing. But yeah, the concepts are useful to many people, so cool. For my potential PL setup, are you waiting for a pullback to VWAP and then evaluate? I'm waiting for an extension of the initial balance. At the moment, I don't know which side that's going to happen in. So VWAP is not necessarily what I'm looking for. I'm first looking for other time frame participants to appear. And then I'm going to decide what to do with it. A lot of the times, Platinum will do a sell-off in and around COMEX Open. And just by the fact that we are having a very, very quiet London makes me think that this Tuesday we are, for these instruments, waiting for FOMC or something tomorrow. Because we do have FOMC tomorrow. So again, I'm not super rushed to pass this today. If I get it set up, I get it set up. Obviously, DAX is on its own story. Yes, it's very bullish. But again, DAX, it extended the initial balance. What would I want to see here? So one of the things wouldn't be bad is the tests of 23,400. That's ballpark initial balance high. If we start to dip into the initial balance, I do have another point, which is this whole area. So basically, it's a demand area that we created on the way up, and it also has Globex VWAP and the 9 EMA on this chart. Failing that, I might look for shorts, so weakness to rotate all the way down to 23,300. So that would be my next point. Why? Because we have some form of calls there, so there's a lot of call buying happening. And yeah, so right now, this is just too crazy for me. When something goes away, I let it go. So if I'm not already seeing it well ahead of time, I don't chase. There's a reason why I'm called Market Stalker D, right? Because I sit and wait on a branch like a lizard. So yeah, I don't know on Platinum yet. Once we extend the initial balance to either side, I will be able to tell you more. But right now, I'm just watching. I don't have much of a bias. Longs look good, at some point. But whether they happen as a breakout of IB or as a failed auction of some sort, or as a complete mean reversion down to COMEX value, and just to save time, COMEX value is actually not that far away. It's 10.28, so 10.28 is the COMEX value high. And then we have the POC and settlement somewhere there as well. So actually, I wouldn't be opposed to this sort of a thing. We also had a bit of a swing low there. It's more of a speed bump, but if we look at where they sort of pushed it up at the open of Globex, this whole area wouldn't be a bad area for longs. So, So right now, not really planning breakout trades. I'm waiting for the extension of the initial balance on this session. If that doesn't happen, I will wait for the next initial balance in next session. And then aiming for that whole 10.28 area. So here it is on this chart as well. There we go. And that's where value high is. And a whole bunch of other confluences. So we'll see. We have the POC on the 30-minute visible volume profile there too. That could be a decent bounce point. I'm not too in favor of doing intraday POC bounces, but sometimes it is appropriate if the context calls for it. So yeah. So how many combines did you fail before passing your very first one? Okay, so I started with Topstep in 2015, a long time ago. And because there were no resets back then, and because the 150K combine was $397, I believe, per sign up, and they didn't have the monthly thing at that point. It was like you sign up, pay $397, and then you need to have 10 trading days before you get to step 2. I was one of those, right? So in case you don't know, I was the first female to get funded with Topstep. And I was also within the first few traders to actually overall get funded. So it was a long time ago, and the rules were completely different. So there was no blowing up combines. Like, I'm not going to blow up a $397 investment. Now I feel like the whole combine experience has been reduced to the point of, let's just, blow up. And it's like $49. Back then, it was bloody expensive, and like I was doing okay, but, because I obviously was already trading and I was a prop trader. I was trying to go remote after I came back from Chicago, because I'm like, I like the way they do prop. I want to do, that. I don't want to be doing the London way. The products weren't the same. I really got used to trading crude oil. And yet, like, you could do it, but they were, like, a lot of the prop firms over here, they kind of insisted that you ended your day at like 5 p.m., just like a normal 9 to 5 job. And my setups wouldn't even appear until like 3 p.m. So there was a lot of waiting around. And this is actually how I came to trade DAX, because I needed something else that was moving for London, away from my core products. So, I started learning how to trade the German DAX. But yeah, anyways, back to the blowing up combines. Like, there was no such thing. You couldn't reset. Like, if you wanted to get another combine and you kind of really messed it up, you had to pay another $397. And there was no monthly subscription either. It was just like, sign up, trade for a minimum of 10 days. If you don't make it, you don't make it. It's fine. But there was no, it was a 30-day combine, right? So you have effectively 20 working days to pass a combine, or 30 calendar days, but obviously no weekends. And if you fail that, if you don't reach it in that first month, this is how it used to be, you would have to buy another one. So, you didn't have to sign up, but, it kind of forced discipline on you, but it also forced you to really be careful with positioning and sizing and everything. And even if you passed the first one, even if you passed a combine, you then had to go through step 2, which was abolished and eliminated like a few years ago. So the step 2 involved that your daily loss limit now became your weekly loss limit. And then you still needed to trade for a minimum of 10 days. And there was none of this sim trading nonsense. That wasn't a thing. So once you were past step 2, you would immediately go into the live account. And I know that because I was testing it when I first got the live account with like limit orders, and you could see them on the dome. However, after a while of being in the industry and stuff, obviously they realized that too many people are blowing up live accounts. That increases risk to the company. So as the industry grew, there was this idea that you're going to go on the sim, and then once you generated 5K, you would get moved into the live. So I didn't blow up combines willy-nilly or, like there's no tomorrow, because you couldn't. You couldn't. And you couldn't pass in 2 days or 1 day or, straight to funded or whatever. You had to trade for full 10 days before you would even be eligible for it. So there was no concept of anything like resets. So even if you passed it, you don't go straight into an XFA. You needed to prove yourself, because it's a trust thing most of the time. Yeah, see, look at this. So my platinum thing is definitely falling towards the other side of the initial balance now. So we'll see whether they extend it. And I mean, ideally, they could go back to hit settlement at 10.26.5. So yeah, this whole area is very interesting. Now, if we go into a deeper pullback on this platinum, I do have some exhaustion areas. So I have 1022.7, that's the London ASR low. And then I have another deeper one at 1016, which is the overall 24-hour exhaustion point. So yeah, it was a very, very different thing. And I think I only tried like 2 or 3 times. It wasn't like, oh yeah, within a space of a month. So it was maybe like 2 to 3 months where I was like, okay, let's do this. But because I already came from prop and I knew about the risk parameters and I knew about certain performance metrics that you had to follow, I didn't come into it as like a noob. I came into it as a prop trader with like 2 years of trading experience already. So it's, it's different. Isabel is asking, does platinum open at 9 a.m. Eastern or same as other metals at 8:20? Very good question. Same as other metals, which I know is confusing as hell because it's actually listed on the NYMEX exchange. So just like you, I went down the rabbit hole to figure out what's going on with that. And yeah, I found out that platinum listed on NYMEX, but it's still a COMEX product. Makes no sense whatsoever. So yeah. It opens at 8:20, just like other comics. But I actually started at 8:30. Like, there's really very little difference. So, yeah. So, it is a metal, follows metal, regular trading hours. All right, we got 5 minutes. No setups for now. We'll see if I get one. I mean, just for maybe a little bit of... Oh, actually, hold on. This copper thing is now popping up. So let me have a look at the levels that we're hitting. Copper is extending the initial balance too. Let me get it back up. Yeah, platinum just extended the initial balance, but it's kind of it's not a committed extension. It's like a bit shy. It's like, toe in the water, turn water, ooh. Which, might mean longs as well. But I don't know, whenever I see an extension like this, I'm always thinking, is this a range-bound day? Granny D says, is that a range-bound day? Okay, that's a better extension now. Let me see if maybe a copper long could be a thing. I don't like the fact that we're going straight into this supply. This ADR needs to be much higher up. So 5. Yeah, that's got a lot of. It's turning around. It's turning around. It is a supply. Where are we coming from? Slightly weaker GEX levels there. Let's see what happens at VWAP. Let's maybe still try maybe a long platinum. I mean, it's not exactly my level, but I want to do a trade here for you. Let's see what time and sales is doing on platinum. I don't have bookmap open because I'm worried it's going to crash my computer. A few more questions. Okay. What pairs would you recommend? No pairs. I hate Forex. I trade DAX that we don't have on London. And you say it yourself. Euro, it's been very slow and choppy. Lately, hate to burst your bubble, but Euro futures and generally Euro USD has been choppy since 2012, mate. That's why I went into futures. It never came back. Like before then, I used to have like 150 pips per day to play with, sometimes even 200, 300. And then European austerity measures came and they just locked everything down. And since then, it's been a pain in the behind to trade. Okay, I'm going to go long platinum. Trying it, and because it's $5 a tick, staying true to my risk per trade, I'm going to try 2 lots for a risk of 345. Again, right now, not the biggest trade. So if we manage to get a failed auction out of it, it could end up as a neutral day. Yeah, so during London, I like to trade on Topstep, what we've got, copper and platinum. However, even these products, they still tend to have this thing where they are very kind of non-committal and quiet for 2 hours into London. The only thing that does move would be the London-specific product. Like, for example, it would be DAX, which, for all of the, 65 ticks that platinum has moved, This one, DAX, has already moved 242 ticks. So, you know, I really wish that, you know, we could have like Topstep as a proper prop firm where you pick an exchange and you can actually trade whatever you like. Now, I'm going to do my partial stops here just to protect the downside a little bit. So we don't get smacked for the entire 35 ticks. So yeah, platinum and copper. That would be my choice for this particular session. Radoslav says, good morning, Dee. How do you hedge exchange rates? Do you prepare somehow for possible US debt default? I don't do hedging in that way. Like, I hold stocks, but every time I'm thinking trouble, I just do protective puts for the time period that I'm thinking. I'm of the opinion that generally the stock market is quite resilient because I've been through, you know, I've been through the credit crunch, I've been through COVID, I've been through the first Trump administration, and, you know, there are signs that these tariffs will probably impact the interest rates. But again, this is why the Fed rate is there. Like, I don't know whether people are even aware of this, but changing interest rates, it's not some kind of an evil way to, you know, control everything. They're controlling the cash flow of the country, right? And one thing about the Eurozone that I'm finding quite utopian and not a great idea would be the fact that they've taken away the ability to, for the individual countries that have very different economic standards, they've taken their power to actually control their own cash flow. So, you know, it's a very interesting thing for me. But do I hedge risk? No, because my time horizons are like 20, 30 years, right? I'm not looking at what might happen over the next like year or two or even 5 years. And for now, we've managed to survive all of the apocalypses or semi-apocalypses, and then we recovered and then made all-time highs. So I'm just very relaxed about it. And the fixed income side of things is not my market. So you can sometimes, you know, if you really want to, you know, hedge risk, you can kind of use it via a combination of fixed income. You can use it via, you know, protective puts. You can buy gold. You know, we've seen gold go over 3,000. What's gold doing today, actually? Yeah, I mean, it's sticking above 3K. Yeah, it's crawling. It's crawling. But yeah, interesting. All right, let's get through a couple more questions. All right, so platinum is kind of going to my levels now. But hey, it wouldn't be a stream without a trade. So let's have a look. I'm going to put this chart on a 2-minute chart because it's a better thing for platinum. And let me get rid of the chart executions because that annoys me a lot, and it makes me not see what the hell is going on. All right, so now we look for a possibility to scale in. This is not GEX1 on platinum. This is from yesterday. Oh, no, it is. Did I plot this morning? I have no memory of that. Interesting. GEX2 is down here. So let's see if GEX1 can bring us a reversal, and then I can scale back in. So that's still the same trading idea. Potential longs. Just need to have something going here. I mean, there are buyers. Are they big enough, though? And, yeah, Yeah, so let's have a look at the final question. Thanks for the clarification, Isabella says. Another question on initial balance. When you set up IB for London, do you use it as a basis? Even as New York opens, do you set up another IB? I set up another one. So basically, mixing and matching sessions should really only be done if the London session is the main session for that product. So for example, if we have DAX or something, I will still keep both sessions on there because obviously the New York session is not nearly as important for DAX, even though it moves, but it's just not its main thing. However, for most other products, I will use kind of like Drew Barrymore in 50 First Dates. London IB doesn't exist. I have no idea what happened there. I have a brand new reference. Nothing else exists. And you basically just reset your mindset, your everything, and you just go to new session, new levels, new areas. However, options activity from end of day still stays. So that is the only thing that I wouldn't change. Everything else, unless it's like I said, London specific product like Bund or DAX, then I wouldn't consider London initial balance very relevant. The only time I would kind of consider it is if it happens to be a swing low or a swing high. And then we sort of moved away from it and we're coming into that area again. So I'm like, okay, well, let's have a look at whether maybe we can hold that swing. And at that point, is it really an initial balance or is it just the fact that its location in the swing is at the top or bottom? You know, who decides that? Come on, buyers. I want to do a trade. All right. So now we need to go over GEX1, which will give me an opportunity to scale in and to basically scale in back to the top, to the maximum default size of 2, and to also improve my average. So there's no panic. There's nothing. You're working with the zone. Would have liked to have seen it a bit lower, but, you know, I can only work with whatever we have on the stream. Come on, GEX1. Where are the market makers? And then once I'm ready to bail, then we're going to call it a day. But yeah, so partial stop losses is something that I like to do whenever I'm trying to control downside, and especially if I'm like slightly away from the level, but I still need to do a trade. For whatever reason, usually it's because we're on these streams and people are like, yeah, she's talking too much. Where's the trading? So, you know, you do things that you maybe wouldn't do. Do I have a scale micros? Oh, yes, I do. In a 50K combine, I will very rarely trade like the I will rarely trade minis. Obviously, platinum doesn't have micros, so it's like you're stuck. On a 50K, I would just stick with 1. So there's no scale-ins, there's no scale-outs. It's just like, you know, you're in, you're out. But for other products that do have micros, like copper has got micros, I will absolutely use them on a 50K account and in a new XFA as well. So let's say that we go into a new XFA, it's 150, but I don't want to start on super large position size. I will actually start on 3 micros on the copper. And then I will basically adjust my position, just like you've seen me do here on the Platinum Mini. So it's the same thing. So I might control my downside through partial stop outs. And then I would if the price action still shows me that that's the right idea, I will then scale into it to get a better average. So I do like to, whatever they're called, DCA. But I do it in a zone, and it's not like unstructured, it's just click, 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 more. No, it's like I have an 18 tick MAE, so I know that at 18 ticks, I usually get some sort of a reversal. And when I'm doing these sort of scale outs and partial stop outs, I basically put it somewhere a few ticks out of my MAE for that product. And then if it turns around, I will scale back in. Okay, so hopefully that makes sense. Do I have a set target, or do I hold? Do I trail while I hold? I never trailed runners. Trailing swings that you're intending to keep for 4 hours is just not something that is advised, because you will get knocked out. You'll get knocked out. You will never reach your intended target. So I'm of the opinion that if you're going to trail, that needs to be more of a scalpy type move. It can be a swing over a smaller time frame, but me trailing stops on swings, no, you'll never see me do that. Why? Because over time, very early on, I realized that trailing stops has cost me so much. And I've just developed confidence to read the situational, to have the situational awareness to read what's happening with price action now. And if I want to bail, I want to be able to control that, not the market. I can tell when my invalidation areas are invalidated and when the trade is not valid anymore, right? But at the same time, if I'm going to do a swing, I will choose a product that is suitable for a swing. Like, for example, copper, very directional. So I know that even if it, and then I also know the times of day when it typically turns around. So for example, copper typically likes to turn around a little bit, just a little bit in and around the overlap, and then usually in the first hour, so during the initial balance. After that, it has another sort of directional move, and typically those sorts of pullbacks are very limited on copper in particular. So yeah, it's one of those things. And I will frequently run multiple positions as well. So obviously for the sake of these streams, I kind of keep it to one. But frequently I will have like 3 open positions running on 3 different things. So I might try, short in copper, long in platinum, maybe long in another unrelated product like RBOB or something, depends on the time of day. So I'm not somebody who only runs one active position and that's it. I am perfectly able to know what I'm looking for out of each and every one. But yeah, trading stops on swings, never. Especially not on runners that I plan to hold for hours on end. But, you have to be careful with trade locations. Like, for example, this one, I don't think that's going to be a swing. If I get some kind of rotation back up through the initial balance, I will be happy with that. If it doesn't work, it doesn't work. I will wait for a better trade location. We're getting to the point where London, if it was going to do what it needs to do, which is a directional move, is not happening. And now I'm actually getting the sign that we are extending below the initial balance and that my trade idea for right now is not valid. Now, I still have the level at 1028 and 1026 and all of that, but it may not come now. It might only come after 9 a.m. Central. So for London, unless we bounce from this GX1 area, like right here, right now, this is now an extension below the initial balance, and I don't want to be in a long if we manage to hold for the next 20 minutes below it. That would be an invalidation of the trade. I don't need a trading stop to tell me that, right? So even if I was in a short, I don't need a trading stop to tell me if we pull back into the initial balance and fail the auction. That's against what I was looking for, right? If I'm short, I don't want to see a failed auction long. That's the worst thing, right? And then you bail. So whether you trade your stops or whether you use situational awareness, it's up to you. But for me, trailing stops is not the right thing. So yeah. All right, GX1 is not really doing what it's supposed to be doing here. So right now, market makers are not looking at GX1 as a level of interest. But, it was worth a try. So I'm going to kill that early. And again, I don't need anyone to tell me that I'm not seeing what I wanted to see. So my initial idea was that we're going to pull back into the initial balance and that GX1 is going to be the one to give me a bounce. It's not doing that. So there is a cause to now say, actually, the shorts are on, right? And maybe that is the right call. But for the shorts, I want to see a test of at least 1030, maybe even 1032, 1031, which is closer to this VWAP and the initial balance low. So again, wait for your levels. And some of my levels are MGI. They're market generated information. So they're not, it's not that I, that I'm like a wizard or something. I just look at it realistically and I'm not bothered by losses, right? I'm like, oh yeah, I've had one loss. It's like, whatever. I tried a long. I have another setup. So based on market generated information. And what is it? So the second one, no, I wanted a rectangle. Hold on. Let me change the rectangle. Let's do an ellipse. So this area here would roughly be where I want to see shorts. And some people would be like, oh yeah, let's jump into short, but I don't like doing that. That's like impulsive trading. All of the metals all of a sudden are turning around. What is going on? Apart from gold. Gold is still going up. Gold is like, I'm going to hang around 30, 35. Nobody cares. So yeah, what is that all about? Let me just look at financial juice for a second. Are there news? OPEC plus oil output rise by 100,000 BPD in April will not affect oil market. Could that be it? Or was it the ZEW? I don't know. The zoo. I don't know. There's some ECB speeches going on. Who is it? Yeah, okay. So they had some blah 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 happening. So this is probably why. All right, fair enough. Headline risk. Again, this is why we have stops. I don't know why gold isn't reacting to it though. This is so weird. It's like look at gold, and then look at platinum, and look at copper. So it's like, what gives? But hey, they're not 100% correlated, right? Copper did reach, oh no, that's DAX. Sorry, no. Copper, no, I've got no levels here. I don't think I'm going to find a trade here, guys. So, try the platinum one. But, I mean, unless it bounces again, I'm going to have to end the stream and that'll be it. So, yeah. Now it's at that zone that I was talking about, but because of this speech from a whole bunch of other people, I'm not too keen on entering until I see what happens for another 20 minutes or so. So, yeah. Mint trades, love the answers. Thank you. How are your VIP students? I'm part of the lunatics, and I'm blown up until April. Any advice? Size down, slow down. The parrot. Size down, slow down. Size down, slow down. Size down, slow down. Polly wants a cracker. This is what I say to them. Do they listen? Well, some of them do. But, there is only a certain amount that we can do as coaches. It's up to you guys to implement them. If you're not going to listen to the coach, it's a bit pointless. And I mean, I tried. I have about 7 wayward sheep that are just not even in Discord. They're just not listening. They're still full porting it. They're still doing stupid things. They're still blowing up. And I'm like, I've given you lectures. I've given you a repository on Loom. I've given you the clear advice of how to approach it. Those that have followed it have managed to sustain the VIP combines for long enough to feel what it looks like to actually trade sustainably, but everybody else is like, yeah. Anyways, guys, I'm gonna finish it up for my own sake of rest and stuff, and Bruno also, so I'm not gonna hold you guys longer. I just saw the time, so we got talking, didn't we? Christ. But But just as a punt here, because I'm just wondering whether gold is going to follow. So let's see if we get some shorts here. Is gold going to follow? Is gold going to follow? Because it's not a bad area. It is an options exhaustion area here. So let's see. This is just literally taking a punt here. The gold might actually follow us back down. But yeah, keep an eye on that. It's like I said, it's not a bad area for shorts. So what I'm doing, I'm just looking at what's happened to the other metals and whether gold is just like a little bit late to the party or something. So yeah, let's see whether that correlation works. Anyways, thank you so much for being here with me. I will see you again tomorrow. Yeah, until then, enjoy the rest of the broadcast. Thank you for hanging. Thank you for your lovely questions. Hopefully this was a good class to reflect on some of the more sustainable trading practices to help you move forward with your skills. Click like, click subscribe, and check out the YouTube channel in the comments. That is, so not in the comments, in the description box underneath this video, because you can find my links under there. Until tomorrow, thank you for hanging. This has been the London session on TopstepTV. I'm Dee. Take care.